I wanted to talk about the fact that the rates are higher in 2023, and can the higher interest rates actually help home buyers buy the home? Make sure you stick around. I have some real data thanks to Barry Habib and the MBS Highway. Let's jump right in. Existing home inventory since 1999 to 2023. This is a screen that can show us that there is no housing bubble. Look at the 2008. It was 4 million inventory, right? So we had 4 million homes on the market. And now in 2023, we're looking at January, February numbers. We're looking at 980,000. We have only few homes on the market. That's why the home prices, there's no real estate crash on the horizon. Existing home inventory. But what's the real story? The real story is that 402,000 from the 980,000 that they're telling us, 402 are on the contract already. So active listings, the actual inventory is 578,000 homes available on the market right now. The active existing home listings in the US, February 2023, shows it's 578,000 homes available. So that's a lot less than what it was back when we had the crash in 2008. So not the same market, completely different. I made other videos on that topic as well. So we need to use the current market as an opportunity. What I mean by that is that we really don't know when the bottom will hit, right? But it kind of feels like it's just about to hit. And what that means is that sellers are still more willing to, because once the sellers know that the housing market is on the uprise again, they're going to be more confident and less willing to work with you on the purchase price. But if we get the house before the bottom, and that's kind of what it feels like right now, seller is more fearful, less competition, you can get a better deal. Because once there's more buyers on the market, sellers will know that they will have multiple offers on the house and they won't be willing to negotiate with you as much. And this is all about getting the house in 2023. So this is one of the many reasons why buying a house in 2023 is actually a good time to buy a house. Now, let me give you an example over here on the home value. If you're buying a house for $500,000 and you put 20% down, obviously you don't have to put 20% down, but just in this example, home value of 500,000, putting 20% down. So if you get a mortgage for $400,000, recently we've seen another increase in the rates. Rates run from sixes to sevens. Okay. That if you finance $400,000 and the rate went up 1%, that increased your monthly payment by about $257 per month. So, multiply that times 12, the increase over a year is $3,084. Sounds pretty bad, but let's look at this. If you buy a house for 500,000 right now, it's not crazy that the sellers will give you a good deal. You can get a $500,000 house for 490,000. So you can get a $10,000 savings, a $10,000 better deal when buying a house, because the sellers know that there's fewer buyers on the market because the higher rates. They'll give you a deal just to move on for whatever reason. Divorce, moving states, changing jobs. Some sellers just have to sell. So they're willing to negotiate with you, and where you probably have a better chance of getting the house under listing price. Okay. Predicting the appreciation this year for 2023 is somewhere between 3% and 8%. In this example, I'm showing the appreciation of 5%. So if you buy a house now and then a year from today, so you bought the house you saved 10 grand, throughout the year, the home will appreciate 5%. 5% off of 500,000, that's 25,000. So if you buy a house now, it's early March 2023. Let's say a year from now, you refinance. Throughout that year, it's not crazy to think that the home will appreciate $25,000 in value. So you got 35K right there. And then if you refinance, and that's what we're always telling everybody, to buy the house now and then refinance when the rates drop. So if you take out the cost for refinancing around 5K plus the $3,084 additional increase in your monthly payment, you're still left with 26 over or just shy of 27,000 total benefit of buying a house now compared to waiting till for later when the rates drop, because then we'll have multiple buyers again on the market. Everybody is going to jump right back in to see if you can get the house. But as we saw last year, I had clients that couldn't get the house. They were paying 10, 15% above list price, and they still couldn't get the house. The rates, I understand, being a mortgage professional, that's something that I know. Rates go up and they come down. So always the goal is to get the house, become a homeowner, get the house, and then refinance when the rates come down. Remember that 80% of all the homeowners will always refinance within the first 10 years of becoming homeowners. So if you're looking at these numbers over 30 years and you're freaking out, that's not accurate. Nobody stays in the same house for 30 years, and definitely nobody keeps the same type of financing for 30 years that they used to originally purchase the house for. If you find this information helpful, don't forget to smash that like button. Leave your thoughts and questions in the comment section. Don't forget to subscribe so you don't miss any future videos like this. And I'll see you in the next video. Thanks for watching.